No, I don't need a degree to know this ain't love at first sight. 'Cause I know how this works, I got my ABCs right. Oh, so let's play pretend. Say you'll be the one for me, say you'll be the one for me forever. I know this will end tonight, but you'll be the one for me, say you'll be the one for me. It's been so long since I got so close to someone. I know this ain't love, but let me stay a while. And pull me closer tonight, keep holding my hand. I know this ain't love, but let me stay the night. I said let me stay a while. 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 I said let me stay a
And good morning, everyone. It's Monday, the time of the week again to look at the markets and see what it's bringing us this week. Hope sound is okay. If not, just let me know in the chat. As usual, we start with the news sites. Obviously, European stocks are getting pretty much destroyed at the moment, because the consideration of the European Russian oil ban and the gas bans. So there's not much to gain from that unless you short it. Just refreshing it quickly so I get the latest figures. While it's loading, quickly look at the calendar for this week. Today, no events, nothing that could move the market, but tomorrow we've got the balance of trade of the US. It's expected to dive a bit further. As you can see that it's been slowly declining. Now, I think I say this every Monday, but it's not if it turns out bad, but if it turns out worse than expected. So that's the market mover. If it's less bad than expected, it could have an upward momentum. If it's better than worse than expected, it could go down. Wednesday, pretty quiet. Obviously, crude oil and gas are interesting, but I don't see them as market mover. But Thursday is the big one. It's the inflation figures, and it's expected, the year-on-year is expected to be going up quite a bit again. So quickly going to those inflation figures, this is pretty much since the beginning of last century. And you see we are already, and these are the January figures, because this is delayed, we're already at the highest level since 82, since the beginning of the 80s. And it's expected to be 7.9 now, so that would bring us close to that 8% mark, somewhere here. We only had this high in the beginning of the 80s and in halfway the 70s. So that's a clear sign of what's happening in that world. Also, the debt to GDP in December was sky high. Consumer sentiment is broke the support line already, and it's now probably dropping all the way to these levels. Also like in 11 and 8. So we're definitely going into recession zones. Like here you had in the 90s and in the 2008 banking crisis and the dot-com bubble and in the 80s. So these numbers are going definitely into recession territories. While the central banks keeps buying assets, and I think the last figure of this one is, yeah, that is recent. It's from last week. So the balance sheets of the central banks keep going. European stock markets, despite of all the buying of the central banks, you see European stock markets have gapped down massively, and it's really getting past these support levels. So that looks very bearish, and there's a lot of downside potential. If we go to from here to pretty much the COVID crash, there's like 33% downside potential for that, with the first real support is around that 340 here, so that's pretty much halfway. Government bonds also not doing too well, it's quite surprisingly, but 10-year bond yields are highish, but it is double bottoming here at this support level, so maybe it will get a small bounce up. And also Europe is also still increasing the balance sheet, but despite all that, there is the stock markets are crashing down quite a bit. Last weekend I've been looking at some higher time frame Bitcoin charts, and as the announcement banner said, there's a huge bullish structure building. If you look at it on the daily or the weekly, you see a very clear ascending channel that we've now pretty much double bottoming on the low part of the channel. So that's very bullish structure. You had an insane run up, obviously, from in the end of 2020 to beginning 21, and we've now sideways accumulating on the pretty much the weekly time scale, and that's quite different than the previous down cycles, the bear markets. The bear market's never been in a multi-month ascending channel, and it's always had a blow off top and then just zigzag down and stabilize, find the bottom, and then slowly recover towards the halving. This looks very, very different than all the previous cycle before, so don't think we can get any value from analyzing how previous cycles went. And as long as we are in this channel, there is no argument for a bear market really. On the higher time frames, obviously mid-term time frame, we have been in a bearish trend, that's quite obvious. But on the higher time frames, daily and weekly, there is no argument for a bearish for a bear market, a longer term bear market. Like we have been making higher highs so far, 2 higher highs and 2 higher lows. So we need one more touch point to really validate this channel. So far it's looking good, and the next hit of the channel will probably be around 75k as realistic target. In the meantime, just drilling down a bit, we've seen that close to the bottom of the channel, the daily chart is forming what could be a bit of a symmetrical triangle. And if we look at the measured moves, that will bring us to 30k, which could definitely be hit by a wick or a solid breakdown of that channel. And the upside target is 58k, almost 59k. So definitely a very bullish structure, and it would need a very drastic event to properly confirm to break down out of this channel, in my opinion. Sadly, with the whole geopolitical situation and the macroeconomics, Bitcoin would need to really decouple from the stock markets and be considered an inflationary hedge, what it didn't really done. So it's a very pivotal moment for Bitcoin at the moment, where we could on the daily scale wick down to the bottom of the channel or even to the measured move, but a daily close below this triangle would probably mean going below the channel. The channel is the last line in the sand for the bullish argument here. Obviously, if we hit the top of the triangle, that's around 45k-ish, and if we break that previous high swing, 45,500-ish, we will probably go to the top of the channel. So highest time frames, definitely no bear market yet, but the whole geopolitical situation could bring one after all. It doesn't matter how strong the TA is, how strong the chart looks and the asset is. If the whole world goes down on the stock markets, it has to be really strong to decouple from that and go up. So can Bitcoin do it? Yeah, I think the fundamentals have never been stronger. The adoption is increasing. The chart looks very good. We had a massive run and now have very healthy, slightly bullish, huge consolidation structure, and it's looking to at least go to the top of that channel again. So the chart looks great, but yeah, the macroeconomic situation is very shaky. It's very dangerous for the whole stock markets. So this might be the biggest pattern in the history of, and the most important pattern in the history of Bitcoin, really, in my opinion. Very historical moment in the making. So if we take a look at those macroeconomic events, we see the DXY breaking out, obviously, like in any recession. We had in the COVID crash, you've seen DXY going to $103. We still have that $100 major resistance above us. And let's go back a bit. To get some broader perspective. So even in 2008, in the banking crisis, it went, although it didn't even go above 90. So very high levels for the dollar, and I think the main reason at the moment is that the Eurozone is being economically affected much harder by the whole Russian-Ukraine situation. And the DXY is against a basket of coins, but mainly the euro. So if the euro goes down, what's clearly to see in the stock market figures, then it's logical that the DXY is pumping. So it's not so much that the dollar is very strong, it's more that the euro is much weaker than the dollar at the moment. So this might look like a nice hedge, but with the inflation and all that, it's not the best hedge in the world, but it definitely outperforms Bitcoin at the moment. Stock markets, with Bitcoin at the bottom, you see Bitcoin has been pretty much following the stock markets a bit. The weekend figures are not in here, obviously. Stock markets look really, really terrible. We just keep getting rejected at this descending resistance line. Pretty much like this until we really break this trend and confirm it and bounce off significantly. There's definitely bear market and recession zone for the stock markets, both in Europe and the US, and I think pretty much globally. So this still looks terrible. We might get a little bounce to the trend line, maybe a wick above it, but don't expect a trend reversal there anytime soon. One of the benefits is gold, obviously. It's just slowly crawling up to the top of the handle. You know, we have this major cup and handle structure from years and years and years long. So it's finally going back to levels we had in 2020. Still looking good. Target is still 2600. So from current to the target, it's probably 30% up. So some people on Twitter will have a party because finally, after probably 100 years, they made a bit of gains instead of just going sideways. So we all know who I mean. The Bitcoin chart still on track here. Obviously, it's the higher time frame view, so let's see how that plays out. Not much to find in the oscillators currently. Bitcoin dominance just going a bit sideways. We had a bit of a pullback on these bearish harmonics there, but it's still supported by the QSN line and the EMA ribbons. Don't see that much changing. We're still making a higher low and a higher high, so this is a very slow uptrend. What's clearly visible in the Ethereum to Bitcoin chart, we seem to be breaking the ascending triangle here, barely in the margin, so it's not really any breakout in volume either. Especially, we haven't made a lower low yet either, so it's not looking great, but it's not looking terrible yet. Interestingly, well positions on Bitfinex in the last couple of weeks. Shorts have been closed and longs are slowly accumulating upwards. I think some big boys are starting slowly scaling into the market back again. Nothing convincing yet, but it is a good sign at least that there is more, the bigger wallets have trust in the market. Total market cap, it's holding on to dear life. It found its bottom at this zone, pretty much like the same pattern as Bitcoin. Really need to break this trend line here, something like that. But so far we're just in an accumulation range. Could be a bit of a symmetrical triangle there, and the breakout point would probably be end of March. So interesting to follow up on that. Let's go back to Bitcoin. On the bit lower time frames, the medium time frames, the 4 hour, you see we are in the clear downtrend following these these GAN lines pretty solidly. In the weekend we just bounced between those. We did break down just a bit today, but if you have the support line from these shoulders of this head and shoulder structure that hit the measured move perfectly, by the way, we're now finding support on that level, slightly above this main support zone that goes all the way back to August 21. If you zoom out, it gets a bit crazy, I know. So definitely at support levels, but we need to break out of these channels here. It would be very nice if we could just test that 40k zigzag a bit before we break out into this major resistance zone. That would make a higher high on the medium time frame, and could be the way to go make a higher high on the higher time frames too. So downward potential, yeah, as long as we don't break this 34k-ish. It's also a point of control in the volume profile of from before. I think that's a bit the current bottom, 34k-ish, and the upside is 45k. That's pretty much a $10k zone that we've been trading in. Let's first focus on breaking out of this major GAN line and getting above it, consolidating, building some structure, and then have a breakout to either side. I think these are the strong GANs to watch out for. Zooming in even further to the 1 hour, perfectly called short here by market profit, and we now trend exhaustion is still in oversold. Had a bit of a recovery, but no exit from the oversold zone yet. Relative strength delta is going up on the 1 hour, trend momentum is going up in the 1 hour. We're halfway a buying cycle on TD sequential, so there seems to be some upside potential in the 1 hour. Also, we got a nice cluster of on ultimate volume. I wonder why this keeps in my way. A nice cluster of stars here that often indicates a local bottom. So the 1 hour looks a bit of bullish. If we look at the trend, you see we have snake eyes, double anchor wave, also another bottom indication. And obviously the fun begins when we break out of this trend line around 39-ish. Currently that's up 1.5%, so a nice scalp move. If you want to play it, you could play with a really tight stop loss, probably around 38-ish, and try to catch that 1.5% to the top of the triangle. Hopefully we break out, backtest it, and get a nice breakout. So if you're looking for some small time frame trades, once this triangle breaks out to the upside, you will probably see the trend exhaustion here making a nice hook up out of the oversold territories. You'll probably see trend momentum crossing the zero and the relative strength delta increasing steadily. Those are very nice confirmations. I'm just taking a scalp, front running it to the top of the triangle. If it holds, it's a nice kickstart trade for a bigger trade with more funds in it than the current low leverage scalp I'm getting. Well, that was the whole Bitcoin analysis there. Let's take a look at the hedge trades we've been doing. We see on the US States oil fund, we saw a massive 8% pre-market run. Obviously that is correcting to the actual stock levels. This is the tokenized version and FTX that I'm trading on. And since we entered, if we take the pre-market data, where I entered on 22 of the 2nd of 22 on a nice date, currently sitting at 27%, 27.5% profit on the US oil fund. I'm using it as a hedge against a more downward Bitcoin momentum, and instead of running to USDT, this gave me quite a significant profit on spot by hedging in that. I'm just gonna ban some money from Pick. If you are there, can you just ban that spammer in the chat, please? Alright, so this hedge trade is doing really well. We identified a couple when we were getting some downwards potential. Gold miners ETF also had a very nice pre-market pump. It's looking to get some significant gains, but it's not performing as amazing as the US oil fund. Junior miners doing better. It's also keeps increasing. Since we went hedge, it's 12.5%, and the normal ETF also about 12%. Those are really close. And the iSilver Trust also has a very nice 9%. If we look at higher time frames, there's no reason in the current market that these will stop going up. Let's quickly look at a more higher time frame scale on the proper ticker, the official ticker, not the tokenized version. Now, taking on the weekly time scale, you see that we had the March COVID crash bottom, and it's been going up steadily since then. We closed the COVID crash gap even, and after doing so, we are now getting a very solid 20% weekly pump on last week. Targets, that $100 is definitely resistance line. If we could break this, pretty much these zones here, probably something like this, would be a target. Obviously we have here a very strong, putting it on the right spot here. So $100, 120, probably more 120, 125-ish. It's definitely a zone here that's will act as strong resistance, and this level here. But even after these very strong gains last week, so this is another 24%, almost 25% jump, more than 50% jump, more than 100% jump from the current price already. And last time we went into a real recession in 2008, you saw the same. You saw a bottom, some accumulating sideways here, then you zigzagged up, went to major previous resistance levels, accumulated, and then went completely nuts. So from that bottom to the peak, it had 178% gain. So there is so much upside potential. If it really goes insane and we would go to all-time highs, then you're talking about shitcoin crypto-like gains of almost 1000%. It's almost unimaginable on an oil fund, but don't expect to go to these levels, but 550 is definitely, in my opinion, the highest target, realistic target. That still would be a 600% pump from here. And I don't see any reason with the whole macroeconomic situation and the whole Russian-Ukraine situation that this will change anytime soon. As long as the sanctions on Russia are there and they are looking to block the export of oil and gas in Russia, there's no reason why this shouldn't go up to crazy levels like that. So I'm very happy with this as a hedge, much better than running into USDT actually. And Bitcoin really has to break significant levels on the higher time frames before I will exit that hedge. Then we're looking at breaking 40k, confirming it very solidly and going straight past this zone. So I think even if the situation doesn't change, as long as we are not breaking out of this triangle here, 45k, so that would mean breaking these local highs on the 4-hour. As long as we're not breaking that levels, I will stay fully hedged in the US oil fund there, because there's no reason. I think the oil fund will outperform the Bitcoin on there. We can quickly take a look. If we take BSD, not here, BTC USD, and we divide it by USO USD, you can just do that on TradingView. And we go to a daily time frame. You see that the US oil fund has been outperforming Bitcoin since December. Actually, since December, where it made this triple top, it outperformed Bitcoin by almost 60%. And TA wise on this chart, there's no reason why it shouldn't continue doing that. Why doesn't it find? It's only looking for, oh wait, I see. You see there were times where Bitcoin massively outperformed it, but TA wise there's no reason why it shouldn't go down, outperform Bitcoin by another 20 to 40%, maybe even 80% if the current market keeps going like this. So definitely staying hedged there. Just gonna look at the current pre-market. There are no official pre-market data yet. We closed at 79.5 last week, but the pre-market is looking like 84 at the moment. We had an 8.5% pump, so that's probably where it will end up. Somewhere in that region. You see we had some corrections back to the stock, the real stock ticker, but the pre-market buying is starting to add up. This pretty normal behavior after a weekend close where you see pre-market orders being taken into account and correcting. So don't get a scare about this. It's really, it ended somewhere here, and this is just weekend close and the pre-market corrections going on. So I think I covered everything. I see some requests in the chat. Euro USD, let's take a look. That's probably looking very bearish for the euro. Yeah, it is actually at a support level at the moment, at least on the daily time frame. If it drops below these levels, I think this is the absolute bottom. We had that left shoulder of this head and shoulder there, and we have this bottom. So this is from 2017. Those are probably the downward targets. So from the current state, that's another 1.5% to the 3.8%, and it's even 4%. So you could take a short on this, very decent risk reward if you take that. So is $1 in the books? Yeah, definitely. I think that's a very psychological level that will probably be very hard to break, but that's even quite a nice trade. But your USD looks like just going down, 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 and with the whole macro and the Ukraine Russia situation, that's not really a surprise, and as long as that continues to escalate and go on, then no reason for this chart to take a change. Just for comparison, it could be worse. You could be in Russia right now and you would see your international from the top in October. We're currently down. Yeah, we were down 50% today, pretty much from the previous high in October. Completely destroyed, and I think the Russian stock market is still closed, I believe. Yeah, it's still, they completely shut it down because it's probably went to zero, realistically. So it could be worse. At least we have Bitcoin that's looking good on the high time frames, and we have some very, very good performing hedge trades going for us. Alright, if you cancel it, it won't go down exactly peak. That's why they closed it, because it's no use, we would just go to zero. Alright. I think I covered everything I wanted to cover. Don't see any new requests in the chat. So thanks for watching. I will do this market analysis every Monday as a public live stream from today on. It used to be members only, but recordings will be posted on the website. And just in YouTube and Twitch, I believe they also keep it. Thanks for being here, and take care.
Cruising down the